Hello. This is actually post-stream year recording. Um, Basically, I'm uploading two other videos regarding the VOD. So one of it is covering the first lesson. Basically, what happened during the live stream was that me, in my infinite idiocy, I decided to not unmute, and therefore there was no audio for the entire lesson portion and also the introduction. So if you want to see my debut introduction with audio this time and my first lesson, please go and look at the one of the other videos. I haven't decided on a name yet, but yes, it'll be labeled very clearly, intro and lesson 1 probably. This will be lesson 2, and the reason why I decided to split today's lesson into 2 is because I feel that what I'm covering here, which will be linked up with the application questions later. So yeah, I will actually go through basics of accounting. Right, so in lesson 1 we learned what accounting is for. And now we learn basics of accounting. So there are a few principles that we follow. We don't call them rules because you'll realize later on that a lot of accounting is based on judgment. So we tend to not create very rigid rules. But at the same time, we want to be guided by certain principles so that we don't just classify things incorrectly. So the first principle will actually be I'll just call it the first P. Substance over form. So what do they mean by substance over form? So intent and purpose is more important than what you actually see. And you can really only get this by questioning. You have to ask whoever who gave you the receipt, what is this for? What was this for? Right. So the first scenario that you might encounter is personal expenses. So what do I mean by that? Say for example, this company is owned by one person, right? That person is running the entire company. He shouldn't be using company funds to buy his own things. What do I mean by that? Say owner buys house for himself, right? So this shouldn't be considered as a company expense, right? Instead, you should classify this as the company lending this person, in this case the owner, an amount to buy the house for himself. So this should be considered an instead of an expense. So okay, let's not go there yet. So just know that for now, this should never be considered a company expense. Right. That is a guiding principle. sometimes that would change depending on, once again, things like contracts, maybe. That could be one. So yeah, this is why I said sometimes judgment is very important. Under certain scenarios, yes, you can consider it under expense, but most of the time, you should say no, or at least ask. Yeah, I think baseline is you should actually just ask, what is this for? And yeah, all right. So second would be same item, different classification. So what do I mean by this? The simplest way to put it is, say you have a office building, right? If you don't know accounting, you would think, oh yeah, this is just a property, right? And in accounting terms, we call this just plant, property and equipment, or property, plant and equipment. The order is not as important here, but people just call it PP&E. And yeah, in some scenarios you'd be correct, because say for example, this is just to house employees for work, right? But let's consider another scenario. Say you're a property trader. You're trading property. Then in this case, inventory, because you're physically selling these buildings, and therefore you should classify under inventory. And there is a difference in how you account for different things. Let's just take one more example. Say you're leasing it out. You're lending it to other companies to be used. So say you have this entire 20-story building. You're not going to be using all of it, right? Unless you are some huge corporation. And yeah, what any reasonable person do is, they take what they need and they lease it out to others. Investment property. So these are some of the different classifications, and each of them have different valuating methods. And it probably will result in different amounts being left at the end of the year. So same building, same cost, but at the end of the year, you see on the something called a financial statement of financial position or balance sheet, the numbers will be different because the way you compute for each classification is different, right? So this is where judgment is important as well, and this is why guiding principles are essentially our only lifeline. Yeah, hard and fast rules usually can't cover all of these scenarios, which is why we rely on principles. Right, so this is some of the basics. It's not all of it, and I feel that this is a good place to actually start. Right, so let's move on to part 2 of this class, right? So some of you might have known something called the accounting formula, or like this formula. Asset equals to liability plus equity. So what does this mean? If you look at a company, say you've company A, right? Say they own a um just a computer. Because realistically, you could technically just do it all on one computer. Not recommended. Don't ever try this unless you just want to be a one-man show. And doing it on a very small scale basis. It's worth $1,000. Right. So let's tell a story here. Let's look at the story of this computer. Right. Obviously, the owner had bought it. Right. Bought from a shop, right? And what did they buy with? Okay. So say for example this you see on the what they call a balance sheet. Essentially it means at that point in time, what does the company have? Everything, including assets and liabilities and equity. So you see this. Let's see. So they say owner bought the computer, right? He paid $1,000, and this is what you see. Okay, so this is a very simplified version of it. So this is your L plus E, and this is just your A. We'll come to classification later, but for now, just accept this. Accept this. Yes, accept this. My English. Accept my English. Okay. And yeah, let's tell a story with this. So this number 700. This is essentially what the 700 means, right? And then the owner took a bank loan of $300, and this totals up to 1,000, and he spent 1,000 buying a computer. So you see what I mean? The computer is being financed by $700 from the owner in the form of share capital and $300 from a loan that was taken. A equals to L plus E. Right. Okay, so if there are any confusing parts, please let me know in future streams. I think I said it in my other video as well. I'll probably set up a channel for you to drop questions in as well. So I think when you drop questions in, just state the name of like the number of the lesson. So for this one, it's lesson 2. So if you have any questions with lesson 2, just say in lesson 2 there's something that I don't understand. All right, so let's look at definitions of each of these three, okay? So for asset and liability, the definitions are similar. Okay, so number 1, both things are shared. They have a history. What do I mean by that? History means someone, somewhere, at some time, took an action that gave rise to this thing. And that is history. Yeah, that is basically it. And number 2, Actually, for the first one, is probably not probable. Here's where you'll see some of the differences between how we recognize certain things. It's still not. Hold on. I realize that these are very technical terms, so I want to make it less technical for everyone. Okay, so I think this is the most basic I can explain this. Second criteria is second criteria for assets and liability both pertain to the future. So, for example, you get the company bought a van, right? So the history of the van is the company paid money in the most basic case. They paid full cash to get the van. So that's the history. And the second criteria would be they are using this van to carry out their delivery operations. And they will get paid for delivering their goods to their customers. So that is what they mean by use to get future benefits, right? So in the future, you're going to use this van to do the delivery. So right now, you're not getting anything back from it. And for liabilities, the history is I need to do, well, I got this loan to do something, right? In the most basic form. And I will have to pay the other person back as required by law. And if you're doing this as a personal thing, like you borrow from your friends, just good etiquette. Yes. So second criteria, likely future outflow. So you foresee that, yes, I am going to pay this. Better record it down, because if you don't and you forget to pay someone else, you likely get in trouble, either by having to pay more or getting sued. Hopefully your friend doesn't do that to you. Just sort it out among yourself, yes. But for companies, in a corporate setting, very strict rules. Yeah, you don't pay up in time, they can sue you and all that, get more benefits out of you. So yeah. And last but not least, let's look at equity. That's it. Equity is just everything that is not a liability. And yeah, I think that is it for the lesson part. I'm going to skip the break part of this, the VOD, to go through the first part of application questions, because I'm pretty sure those were not covered either. Let me check real quick. Hold on. Okay, I rewatched my VOD. I'm just glad that I managed to discover the error before I reached the application part. So yeah, after going through this, hopefully you can relate more to the application questions that is in the VOD. This is just a supplementary. Actually, no, I will say this main material. So yeah, if you have questions, please do drop them in the chat in the future, or as I said, I will set up a channel for you to ask any questions. So do send me anything that you don't understand. And general rule of thumb, if you're gonna submit this work to your boss or to school for grading, try not to go through me. I'm not the most reliable person. I can help clarify certain things, but again, I am not the most qualified out there. There are quite a few YouTube videos made by, actual certified accountants. I'm on my way there, but as you can probably tell, I'm not very experienced. So, yeah. This series is basically just accounting explained by this idiot for beginners. And yeah, until the next time we meet, either in chat or if you have any questions, you can drop by, just ask a question. Welcome them. And if you want to stay for streams, the gaming portion, by all means, please do. It's meant for relaxation. After a long day of work, especially on a Friday night. And if you have work on Saturday, bless you. Good luck out there. And hopefully you get to recharge a little for the night. So until the next time I stream, which is on the, check my calendar real quick, 22nd of May. Hopefully you find all this information useful and have a good rest over the next, not sure how long your break is, but rest well and good luck with life.